Many people believe that getting rich means earning an increasingly higher salary. It's almost automatic. If income rises, the person thinks they're getting richer. But the truth is quite different. The salary may increase, but along with it, almost always increase the bills, the standard of living, and the expenses that consume everything at the end of the month. How many times have you seen someone who earns very well but lives in debt without any financial reserve? True wealth is not born from how much you earn, but from what you build with what you receive. And here enters a powerful concept: assets. Assets are like seeds that you plant today and that, over time, continue producing fruits even when you're not working. They are sources of income that work alone, day after day, month after month. Imagine an orchard. If you spend your whole life just picking fruits at the market, your salary, every month you need to buy again. But if you plant your own trees, your assets, each season brings new fruits without you needing to chase after them all the time. This is the difference between those who depend only on salary and those who build wealth. The secret lies in changing the mentality. Instead of spending all effort just to increase work income, it's necessary to direct energy to acquire assets that work for you. The day you have more assets generating income than expenses taking money from your pocket will be the day you can truly say you've achieved financial freedom. When we talk about assets, one of the most traditional and powerful is rental real estate. And we're not talking just about large commercial buildings or millionaire investments. Often, a simple apartment, a small house, or even a duplex can transform into a true income machine. It works like this. You acquire the property, normally financed by a bank. At the beginning, it may seem heavy to take on a mortgage, but that's where the secret lies. Who pays this mortgage is not you, it's the tenant. Every month, the rent received covers the financing installments, and in some cases, there's still money left over. That is, instead of the property taking money from your pocket, it starts putting money in. And the benefit doesn't stop there. Over time, as the debt is paid off, the property becomes totally yours. Additionally, there's natural appreciation. Neighborhoods grow, cities develop, and what you bought for value X can be worth double or triple a few years later. Result: an asset that not only generates monthly cash flow, but also grows in value in the long term. Think of a simple example. Imagine you buy a small financed house. The rent paid by the tenant covers the installment. 10, 15 years later, the debt is over. But the income continues coming in every month, like a lifelong extra salary. This is what we call passive income. Money that comes in without you needing to trade work hours for it. That's why so many successful people have real estate in their portfolios. It's not just about having a beautiful house or an apartment to show off. True wealth lies in owning assets that generate constant cash. The right property is not luxury, it's smart investment. An important point that many people don't realize is that a rental property can transform into patrimony for generations. When you buy an apartment and rent it out, you're not just guaranteeing monthly income. You're creating an asset that can be passed to children and even grandchildren, always maintaining active cash flow. Another essential detail: you don't need to start big. Many people think it's only worth investing in expensive properties, but the truth is that even a small studio apartment can be an excellent starting point. These smaller properties, for example, are usually much sought after by students, young professionals, or people who need to live close to work. This guarantees less risk of being without a tenant. Additionally, there are various strategies that can increase returns. Some investors prefer traditional long-term rental, while others bet on seasonal rentals, using digital platforms that connect owners and travelers. In this model, often the yield is even higher than conventional rental. And there's another powerful benefit: the so-called leverage. When financing a property, you're using the bank's money to buy an asset that will pay for itself. It's as if you had a silent partner, the tenant, who, month after month, pays off your debt and still leaves profit. Few financial strategies offer this type of advantage. Over time, a single property can multiply. The cash flow left over from one rental can be reinvested in buying another property. And thus, little by little, you build a portfolio of properties that guarantee stable income, protection against inflation, and financial independence. Another powerful asset is your own business that works even without your constant presence. Many people believe that opening a business means working day and night, being a slave to the company, and having no rest. But the true business asset is different. It's structured to generate cash alone, solving people's problems, and continuing to grow without depending exclusively on the owner. It doesn't need to be a big tech startup or a multinational. It can be something simple but well thought out: an automatic laundromat, a small chain of snack bars, an online subscription service, or even a virtual store that works 24 hours a day. The key lies in creating a scalable model that doesn't depend on you being there all the time for money to come in. Think, for example, of a traditional restaurant. If the owner cooks, serves, and does everything, that's just a job disguised as a business. But if he assembles a team, creates processes, standardizes recipes, and builds a brand, the restaurant starts running almost by itself. At this point, it stops being just a job and transforms into an asset. The differential of having a business that generates cash is that it can grow infinitely, different from salary, which always has a ceiling. While a job pays per hour worked, a business can serve dozens, hundreds, or thousands of people at the same time, multiplying results. Additionally, a well-structured business creates something that goes beyond money. It generates value. People are helped, jobs are created, and the community grows together. This is the strength of a business asset. It not only enriches the owner, but also positively impacts everyone around. One of the biggest mistakes when talking about entrepreneurship is believing that opening a business automatically means getting rich. Reality is that many end up creating just self-employment. Instead of freedom, they become slaves to their own company, working more hours than in a formal job, without time to rest and without seeing the business truly grow. The difference between a job disguised as a company and a business asset lies in a crucial point: the capacity to generate cash independently without depending on the owner being present all the time. For this to happen, the business needs to be built on three pillars: processes, team, and scalability. Well-defined processes. A business only becomes an asset when it works in an organized way. This means that even if the owner isn't there, clients are served with quality, products are delivered, and finances remain in order. It's like a cake recipe. Anyone who follows the step-by-step can reach the same result. Trained team. The strength of a business lies in who handles it daily. A well-trained team allows the owner to step away without compromising results. Investing in people is essential because they guarantee that the quality standard is maintained and that processes don't break. Scalability. This is the secret that separates common businesses from true assets. A scalable business is one that grows without costs increasing at the same speed. For example, an online course requires initial effort to be created, but then can be sold to thousands of people without need to repeat the work. This multiplies gains exponentially. Practical examples of businesses that can become assets include a self-service laundromat that works without the owner's constant presence, a franchise network where each unit generates revenue while the central system guarantees standardization, an automated e-commerce that processes sales and deliveries even while the owner sleeps, software or applications that solve problems and continue being downloaded or subscribed to every day. In the end, The true business asset is one that doesn't depend exclusively on you. It works, grows, and generates income even when you're traveling, resting, or dedicating yourself to other projects. When we talk about assets, many people imagine that a lot of money is needed to start. But there's a category accessible to practically anyone: paper assets. These are financial investments like dividend-paying stocks, index funds, ETFs, and long-term bonds that grow with the power of compound interest. The logic is simple. By investing in stocks of solid companies, you become owner of a part of them, and as a partner, you receive part of the profits in the form of dividends. This means that while the company works and grows, you are rewarded without needing to be involved in its day-to-day. Another example are index funds. Instead of buying stocks of a single company, you buy a package that brings together several of them, reducing risks and increasing chances of stable growth over the years. It's like having a basket full of varied fruits. If one spoils, the others remain good. The most powerful point of paper assets is the snowball effect of compound interest. If you reinvest the dividends you receive, more and more money starts working for you. Over years or decades, small amounts applied consistently can transform into significant patrimony. And here's the most interesting detail: you don't need to start big. Even small amounts invested regularly can create a solid foundation for the future. The key lies in discipline and patience. Those who understand this realize that investing is not a game of luck, but rather a strategy for building wealth step by step. Paper assets are perhaps the most underestimated, precisely because they're not tangible like a house or a physical business. However, they have extraordinary strength when used the right way. Think, for example, of dividend-paying stocks. Imagine you buy stocks of an electric energy company. Every month, millions of people continue paying their electricity bills. Part of this money returns to shareholders in the form of dividends. That is, even without getting up from your chair, you receive a portion of the profits simply for being owner of a slice of the company. Now, consider ETFs, index funds. Instead of betting on just one company, you buy a package of dozens or even hundreds of them. For example, an ETF that replicates the S&P 500 index brings together the 500 largest companies in the United States in a single investment. This means you participate in the growth of giants like Apple, Microsoft, Amazon, and many others at the same time. This model reduces risks and offers solid growth over time. The true power, however, lies in dividend reinvestment. Suppose you receive $100 in dividends in a quarter. Instead of spending this money, you reinvest it buying more stocks. These new stocks will generate more dividends in the future, which can also be reinvested. This is where the snowball effect begins. Money generates more money, which generates even more money. Another advantage of paper assets is liquidity. Different from real estate, which can take months to be sold, stocks and ETFs can be bought or sold in minutes. This gives flexibility and allows the investor to adjust according to their needs or opportunities. Finally, it's important to remember that paper assets also offer protection against inflation. While money sitting in the bank loses value over time, companies continue growing, increasing prices, and passing profits to shareholders. This guarantees that your patrimony keeps up with, and often surpasses, the increase in cost of living. In summary, paper assets are the most accessible path to start building wealth. They allow starting with little, offer diversification, liquidity, and mainly the chance to use compound interest in your favor. Maybe you're thinking, but I don't have enough money to invest in real estate, businesses, or even stocks. This is the trap that keeps many people stuck in the same place. The truth is that wealth doesn't start with a lot of money, but with a decision to change mentality. Nobody builds a castle all at once. It's made stone by stone until it becomes a fortress. With your financial life, it's the same. Small steps, taken consistently, have the power to completely transform your future. What makes someone achieve financial freedom is not luck, inheritance, or a millionaire salary. It's the discipline of investing in assets, of planting seeds every month, and believing that tomorrow can be different. While some spend everything in the present, others choose to give up a little today to harvest much more in the future. The question is, which of these groups do you want to be in? If you start now, even with little, you'll already be miles ahead of the majority who still believe that only salary brings wealth. All the assets we've seen so far, real estate, businesses, financial investments, only have value if you have the most powerful asset of all, your mind. It's what decides if you'll transform opportunities into wealth or if you'll let pass chances that could change your life. The mind is like fertile ground. If you plant knowledge, discipline, and good ideas, you'll harvest fruits of growth, prosperity, and freedom. But if you leave this ground empty, any weed, like fear, doubts, or limiting beliefs, will take over and suffocate what could flourish. That's why so many people earn a lot of money, but lose everything in a short time. They don't have the correct financial mentality. Without preparation, they confuse high salary with wealth, spend more than they earn, and end up trapped in debt. On the other hand, there are people who start with almost nothing, but because they cultivated knowledge and discipline, build solid fortunes over the years. What you carry in your mind is worth more than any inheritance. Books, courses, experiences, and even the mistakes you learn to transform into lessons are invisible assets, but that have power to multiply all others. Many believe that wealth is a matter of having capital, but the truth is that wealth is, above all, a matter of mentality. It's the mind that determines how you see money, how you react to difficulties, and what you do with opportunities that appear. Think of two people who received the same amount. One spends everything on consumer goods, trips, and immediate pleasures. The other, with the right mentality, separates part of this money to invest in real estate, businesses, or paper assets. 10 years later, one continues trapped to salary, and the other already lives off income. What made the difference wasn't the money itself, but the way of thinking. Another fundamental point is that the trained mind sees opportunities where others only see problems. When the economy tightens, most panic, but those who have financial intelligence know that these moments are opportunity windows. Cheap stocks, devalued real estate, businesses for sale. It's the prepared mind that allows transforming crises into springboards for financial freedom. The mind is also what gives discipline and consistency. Investing requires patience, planting today to harvest in 5, 10, or 20 years. Most give up halfway because they seek immediate results. But those who understand that wealth is a process and not an event maintain focus, even when results seem small at the beginning. Finally, it's the mind that defines the limit of your growth. If you believe you're not capable, that it's too late, or that money is only for few, these ideas become an invisible prison. But when you expand your way of thinking, you realize there's no barrier for those willing to learn and act. In summary, real estate, businesses, and financial assets can be bought and sold, but the prepared mind is irreplaceable. It's the asset that can never be taken from you and that can recreate wealth, even if everything is lost. There's a very common mistake that traps thousands of people, believing that earning a lot of money is the same as being rich. The truth is that having a high salary doesn't guarantee financial freedom. Many successful professionals, doctors, lawyers, executives earn impressive figures every month, but continue trapped in the same cycle of stress and debt. Why? Because they transform income increase into lifestyle increase. As soon as salary grows, the new car appears, the bigger house is bought, trips become more expensive, and expenses rise in the same proportion, or even faster. It's like filling a leaky bucket. No matter how much water you put in, it never stays. Wealth is not measured by what comes in, but by what stays, and mainly by what is converted into assets that generate income. A person with average income who directs part of what they earn to assets can be much closer to financial independence than someone with very high salary, but without any patrimony that works alone. A simple example: someone who earns $20,000 per month but spends $22,000 is poorer than someone who earns $3,000 but manages to invest $500 every month in long-term assets. The first accumulates debt, the second accumulates patrimony. Therefore, high income is just appearance. True wealth lies in how you manage what comes in how much you manage to retain and multiply. It's not the size of salary that decides your financial future, but how much of this money you transform into freedom. For a long time, we were taught that the secret of prosperity was saving money. Past generations believed that it was enough to save every penny and keep money sitting in the bank to guarantee security in the future. But today we know that this strategy alone doesn't work. This happens because there's a silent enemy called inflation. As years pass, the value of money diminishes. What you buy today with $100 in 10 years might cost double or even more. If your money is just saved without earning, it loses purchasing power every day that passes. It's like running on a treadmill. You make effort, but don't leave the place. Saving is just the first step, but it can't be the last. Saving part of salary is essential to create discipline, but the next move is even more important: transforming this savings into assets. It's investment and not simple savings that builds real wealth. Think of someone who saves $1,000 per year and keeps it in an account without yield. 10 years later, they'll have $10,000. Seems like a lot. Now compare with someone who invested the same amount in assets that yield 8% per year. This second person will have more than $15,000 in the same period without working one more hour. This is the power of putting money to work. Saving is safe but insufficient. Money needs to be directed, multiplied, and protected through assets that generate income. Only this way can you beat inflation and build patrimony that grows over time. Many people give up on the idea of investing because they believe it's only possible to start with large amounts. This is one of the biggest misconceptions in financial education. The truth is that wealth is built with constancy, not with luck or gigantic initial amounts. Investing even small amounts, like $20 per week, may seem insignificant at the beginning, but over time, these small contributions transform into something much bigger thanks to the power of compound interest. It's like planting a seed. In the first days, you don't see anything, but as it grows, the tree starts giving fruits, shade, and even new seeds, which multiply the results even more. The secret is understanding that it's not about the initial amount, but about the discipline in maintaining the habit. Those who invest regularly, even with little, are building a solid foundation. Over the years, these amounts accumulate and start yielding more than the effort put in. There are countless cases of common people who never had high salaries, but who, thanks to small, consistent contributions, managed to accumulate fortunes throughout life. In contrast, many who earn a lot and never invest end life with nothing besides debt and regrets. Therefore, the path is not waiting for the right moment to start, but starting with what you have today. Because in the wealth game, time and discipline are worth more than initial quantity. Now, you've already realized that wealth is not a matter of luck, nor of working until exhaustion. It's born from intelligent choices made day after day. It's assets, real estate that generate rent, businesses that work alone, paper assets that grow over time, and above all, your mind that build true financial freedom. Maybe you haven't started yet, but the most important thing is understanding that it's never too late. Each step, however small it seems, counts. A habit of investing, a change in way of thinking, a different decision today can completely transform your tomorrow. And remember, salary pays bills, but assets buy freedom. While many keep running after more work hours, you can start building something that works for you. The question that remains is, will you continue trading time for money, or will you start planting assets that can guarantee your independence? If this message made sense to you, like this video and subscribe to the channel. This not only helps spread this knowledge to more people, but also guarantees you continue receiving content that can transform your way of dealing with money and life.